This is the culmination of the entire series coming into the entries and talking about price action trading. Once you get to the extremes, the high of the day, the low of the day, high and low of the previous day, not only once it gets there, how it behaves, what kind of price action patterns are we looking for, but also how does it get to the level, whether that be some kind of stair stepping or ramping price action. And as always, down in the description below is this slideshow. If you want to follow along, it is free to download. Just click the link and download the slideshow for you to keep in your binder or print out, or maybe just keep on your computer. Do whatever. Along with a free Discord with over 4,000 members of all people trading similar style as this. So let's get into the stair stepping and 3 push patterns. So stair stepping could just be referenced or compared to stairs, either going up or going down. And then that is either going to be to get to an extreme or once they come out of an extreme. So in this case, this is not necessarily a stair step, but more of a 1-2 sideways, 3 ending in a 1-2-3 and resulting ultimately in a peak formation high. This is a double top. This would be the first leg of the M. This would be the middle. This would be the second leg of an M. And then this would be the right side, you know, the down move, the engulfment of that M. So if you want to draw an M and just try to picture this over here, this part, and then the middle, and then the top part, and then the downwards leg. Let's take a look and see what types of price movements are we looking for. We're looking for ramps. We're looking for stair steppings. We're looking for peak formations. That's going to be your M's, your W's, your double tops, your double bottoms. And there's different kinds of M's and W's. You've got your shortened, your extended, and of course your equal, where both the tops are equal or both the bottoms are equal. We're looking for pin hammers, high of day, low of day, previous day's high, previous day's low. And what this is saying is once the session begins and you're at the high of the day or at the low of the day, if there's a pin going up if you're at the high of the day, or a pin going down if you're at the low of the day, that is a pin hammer at the high of the day or the low of the day, which is not pictured here. How price reacts after the breakout is important. So this would be one of those things where I'm looking after the breakout, what kind of behavior has taken place. 1, 2, sideways, 3, and then now I have my M at the high of the day and that first pullback into the EMA. Then we're going to be looking for 3 pushes ending in 1, 2, 3. This would be 1, 2, and then ending in 1, 2, 3. That's what that's referencing. 3 pushes at the high of the day, the low of the day, previous day's high and low. Stair stepping up to the high of the day or the low of the day, which would, I'm going to show you pictures of that here in a second. Or ramp into the extreme. That can indicate a really fast move back down or going back up. And I'm going to show you pictures of that as well. Let's start off with ramping. Ramping is some of my favorite price action to see because a lot of times it will indicate a very fast move back down or a very fast breakout to the upside on the backside of a dump, and then now we're looking for that pumping price action. So this is a little blow up or a larger version of what I've got over here. A ramp. It's basically a parabolic channel, usually tightly coiled with candles showing little to no overlap that blows off into an extreme, puts in a peak formation high or low, and then begins to reverse. When I say begins to reverse, I'm referring to it puts in a peak formation. So this is like a little double top or like a half Batman, if you will, with the ear, and then there's the head, and then you got the nose, and then the follow through. But a peak formation high, that's the beginning of the reversal. This ramp-like price action can usually lead to fast reversals, and it's because there's so much order flow built up on the way up or the way down that the market is just going to free fall through all of that back down to get the money back at the other end of the range. So what I'm referring to when I say this parabolic channel, so you notice how up through this up move, notice how all of the candles, or most of the candles, the majority of the bars are making higher highs and higher lows. The bottoms of the bars are making higher lows. This one made a lower low from this bar, but overall still making higher lows. This one, this one, this one, this one. This one popped down, failed breakout, and then continues to go higher. Higher low, higher low, higher low. All this is saying is that there is very little to no overlap in the bars, indicating a strong trend in building up of order flow in that direction. So we've got a lot of order flow built up on the way up. And a little quick disclaimer with this could be indicating a strengthening trend within this up move here. And this is has a high likelihood of blowing off in a direction. So now we've got the acceleration and a blow off move and then a consolidation. A bit of an ascending triangle that blows off again, and then immediately you get your failed breakout now, and it pulls back down, and then you can see what happens next. And this goes back for this low here, and the previous day's low all the way back down here. Quick, fast, and in a hurry. We can take a look at a few more examples of this, and of course, I've got examples from this week as well. Not so much with the ramping price action, but with the 3 levels and the 3 pushes and things like that. Okay, here's some more ramping price action, ramping up into an extreme. Again, same thing, very tightly wound, very little to no overlap. Notice those bars making higher lows, higher lows, higher lows, and just trailing higher and higher, right? Just dragging in one direction, blowing off, and then creating a high, creating a second high, and then creating a third high. So 3 peaks. All right, we got peak 1, peak 2, and then a bit of a lower low here, and then a third peak to the high, and then breaking down. Okay, so this big fast move back down, taking out all this order flow, and then going back down to where that pump began. It is important to note this ramping behavior a lot of times could be indicating a parabolic trend trade in the direction of the ramp. Direction of the ramp being this is going up. It could be indicating that this is strengthening or a strong trend. I don't want to counter trend this necessarily until we start getting the breaking down sort of consolidation behavior. Context is always very important. I'm not just taking these trades based off of what the candles look like. There's always larger context that's behind this 3-day setups and things like that. Remember, this video is just about price action behaviors that I'm looking for when I believe that I have a 3-day setup taking place. These examples are simply a demonstration of price action that can be observed to help build a better thesis of what to look for, and of course to help you time the trades within your session. All right, my favorite part of making these videos, which is examples. I love going over these picture examples and just breaking down the chart for you all in a way that hopefully helps you to better understand what you're looking at. So we have a consolidation down here, a little bit of a breakout pullback. So I want you to think about in terms of if you were the trader that was taking this long and you were holding on to this trade, where would you be putting your stops? Or where would you even be entering? So if you had a consolidation and maybe you're a breakout trader, maybe you took this bar, all right? So that's the first probable area of the chart where somebody probably went long. And of course, this is the second place where there's a high probability that traders were going long. These are the most obvious up-close bars outside of this consolidation. So if I took this trade long, I probably put my stop down here. If I took this trade long, I probably put my stop down here. And once it starts to go, where am I going to put my stop? You know, I'm going to put it at break even here. I'm going to put it at break even up here. All right, so step one. That's what all this is kind of saying down here, breakout pullback. I'm likely to enter. Most of the candles in this ramp are making higher highs and higher lows. We have a small pullback here where the bars are going a little bit lower, the wicks, but then we get higher highs, higher low, a little bit lower, but then a higher high, higher low, higher high, higher low. And that continues throughout this ramp. And you can see the tightly wound coil that ends up blowing off. And the blow off, I think, is pretty obvious. We got a big blow off here. Some of the biggest bars on the entire chart. We got a blow off move here. And then a second strong push to the high, or at least it looks strong. And then it stops again. So a second push. And then we get this lower low. So this is where I'm saying, you know, I'm not necessarily going to look to counter trend this. But until I have all of this information on the board and until I'm in my timing window, with all this information on the board, I can make better trading decisions. So now I have my third push to the high and a peak formation. This is a double top, up, down. This is the middle structure. And then the second leg coming down. This engulfment took out the up push here. And then also when we're pinning back up to the high, we might have traders trapped above push 2. This is allowing them to get out if they're quick enough, but not necessarily putting them significantly into profit, and they just keep pinning back up there. So they're working the high of the day, they're working the high of this peak formation. We've made the lower low already and pumped it back up into the high, so now it might be ready to start to follow through. All I have to do is wait for my timing window and the appropriate time. Now this is a chart of the NASDAQ, so I'm primarily waiting until after 9:30 to take trades on the NASDAQ. Here's 9:30. We get a nice big bear bar down, engulfment bar down, and then a pin hammer or a pin bar that runs back up. Really anywhere in here is fine. Even on the 9:30 bar down, probably would have got stopped out if I put my stop up here on that first entry. That's okay. There's always going to be opportunities for second entries if that were to take place. So we get this big bear bar down. Anywhere in here, maybe on a lower time frame would be fine. Anywhere on a lower time frame in here would be fine. Big follow through, and then ultimately coming back down to where those traders were in profit. Again, not necessarily looking for, I'm not telling you to take these trades or anything. I'm just trying to explain what I am looking for at the extremes, the behaviors that I'm looking for. This big push up, and then the 3 stair-stepping moves that are just really not going anywhere. The large consolidation, the ramp, the lower low, and the pump up, and then the consolidation following the pump up is a good indication leading into 9:30 for me to take that trade back down to where the pump began. All right, now we're going to get into examples from last week. All of these charts are going to be NASDAQ charts, and they're all going to be, like I said, from last week. I've got the dates down here. I've got the time frame that we're looking at, and let's take a look. So this was on Monday, and this is the high of the day before the session begins. And we pop out of the high of the day in 1 and 2 and 3, and then this is your up leg, your down leg, your up leg, and then your down. So this is a nice M at the high of the day. We also have this nice pin hammer. And the double top engulfment, the engulfment again goes lower than that first leg up. And that is usually a good indication to me that this will be a decent double top and that it has shown a lot of strength to the downside. Now they did not gap down through the EMA, they did not break out of the EMA. And this is a fairly large entry bar. So what I like to do when I get a fairly large entry bar is go down to a lower time frame and find an entry where they pop back up and then follow through. If there's a shallow pullback on the 1 minute, I'll get in with a starter, and if it continues to follow through strongly on the 5 minute, you know, I can enter in below these bars or on pop-ups or anything like that to size into that trade. Or if I just don't feel super comfortable with how it's pulling back and how it's following through, I'll just enter in with smaller size and keep my targets the same. All right, so some action or some price action notes. We're at the high of the day. 3 pushes outside of the high of the day. So talking about breaking out of consolidation and getting a nice little 3 push stair-stepping pattern. You get your pin hammer, that's this bar right here, with a large upwards wick and then a smaller body. Not necessarily looking for pin hammers all over the chart by any means, but at very specific parts of the chart at specific times of the day, they hold a lot more meaning. And being at the high of the day and being at 9:30 or at or after 9:30, that bar means a lot more to me. I did not close below the EMA, but all other signs are looking good for an entry, so I would have taken this entry or waited, like I said, on a lower time frame to get in. Entry bar on the 5 minute is a little large, so typically, like I just said, lower time. Okay, this was on Tuesday, 5 minute chart, NASDAQ. We're at the high of the day. We're at the high of the previous day, and I ended up getting stopped out on this trade because this was almost a perfect representation, and I'm not even mad about it. This is a perfect representation of what I believe to be a good entry, and then it just didn't work out, and that's totally okay. So this was coming out of consolidation, previous day's high, push 1, push 2, push 3. All of that's looking really good. We also have an up, a down, an up that is also a pin hammer at the high of the day. And then we get this big down close bar that closed lower than all of these other bars over here, which was perfect in my mind. Now, this entry bar was very large, so I went down to a 1 minute chart, and there was a 2-leg pullback and an engulfment that I ended up taking, and I put my stops above that swing high on that lower time frame, and I got stopped out almost immediately, and I waited quite a while. This big second entry short was over 100 points long, which usually whenever those bars are that big, those big entry bars, I really avoid those because you have a lot of downside risk. And yes, you might have a lot of upside potential as well. However, you know, a lot of times it will do exactly what it's done here. And then this did end up following through after the session ended, but no big deal. We took the 1 loss on this. But let's just talk about the price action on this one. 3 pushed it outside of the high of the day. You get the pin hammer at the high of the day, which was this bar here. That's all perfect. The engulfment was lower than all of these other bars. So that's a lot of strength. That's good. Second entry short was over 100 points. Again, usually best to avoid those entries in my opinion. So why did this not work out? Well, it's not always going to work out 100% of the time. A lot of times, number one, I was the first mouse because this was a lower low. This was the lower low. And then this is 1, 2, and then 3 back up to the high. And then ideally, realistically, that should have followed through, but it did not. And there's nothing wrong with that. It's going to happen. It happens all the time. It's just about managing the trades, of course, and keeping the loss as small as you can. And then whenever you do get into a good trade, allowing it to actually follow through and managing it as you should, as your plan dictates. All right, very similar to some of those other examples. I think this might have even been identical to some of those other examples. You got big push 1. This is the high of the day before the session began. 1, 2, and then sideways, and then you get your 1, 2, 3, and then remember I said this engulfment closing lower than this bar. Like I said, this was Wednesday the 11th. Engulfment, this is your first pullback. So this is another, if you're sitting there taking notes about the different types of entries that I like to see, this is the behavior that I like to see at the high of the day. But what types of entries do I like? First engulfment down, as long as that bar is not too big. I like to take that entry down as a starter. And then whenever you get these first pullbacks into the EMA or first pullback in general, I like to just draw my little line here. And then anywhere in here is going to be where I'm going to look on a lower time frame down on the 1 minute chart to look for a little 3 push pop up and an engulfment. And I will take that as my second entry short. Or if I did not enter on this bar because I thought it was too big, the first pullback into the EMA is really good in my opinion. And then we have our second pullback here, which if I missed the first pullback, less likely to take this, but still, you know, potential down a lower time frame. And then you get your third pullback here, and I'm almost guaranteed to never take this entry because The move started all the way up here. This is all my reward down here. And if I get in down here, my risk is going to be a little bit too big. So first pullback into the EMA, fine. Second pullback, good. Third, very almost guaranteed not to take these. First entry short. Usually I'm going to look to take the first entry short off the peak formation that was created. This is the M. Second entry short could be the first pullback, or if I didn't enter in that first time on the second leg of the M or W, then that will be my first entry short, second or third entry short, and then I'm avoiding these. A bit more of a choppy day on Thursday, but we have the London session over here, and this is the low of the day down here before the session begins. And London had pumped up. You can't see it from Asia, but they had pumped up and started to break down. This was a lower low, and then they pumped back up and broke down. So this is the second lower low now. So we have a breakout. That was the first push down, and then you get your second push down coming into the New York session. And then right into 9:30, we get the third leg down into the low of the day, which is fine. This could be a really large breakout to the downside, except now we have the up close bar, the down close, and then the engulfment. So now this turns into a shortened M. There's your higher low. And the breakout of that M, or excuse me, W is going to be right here. So they break out. Now this is a really large entry bar again. There was over 50 points or 50 pips of profit from this move here alone. You get an engulfment and a pin hammer, which is fine. Just recognize or understand that this bar, the way that this is closed, is right at the high. So your upside potential is not nearly as much as if this engulfment had maybe closed here, and then they did a little pullback, and then you get your big move up. Whereas this has made a higher high, and they've actually came out of consolidation 1, sideways 2, and 3. That higher high is still valid, it's still good, but now we get 1, 2, and 3 down. We get the higher high and the 3 legs down. And then now there's a good opportunity to enter after the higher high, 3 pushes down. This would be like the first mouse entry, getting stopped out or stopped at a break even or shaken out of their trades. And then now it can go vertical the rest of the way. So if I'm entering this, I'm going to keep all of those details, all of those things in mind. And just, it's going to be like a get in and get out type of ordeal. I'm not going to sit there and hold on to that expecting a larger swing until this happens, but this is out of the timing window, so probably not for me anyways. But just reiterating the price action that we get once we get to the low. The 3 legs down. Also something kind of cool to note is the descending triangle into the extreme. That's the second time now that I've shown an example where they've used a price pattern to force people into an extreme. The other example was a long example where it was an ascending triangle and it went vertical outside of that ascending triangle, immediately puts in a peak formation and reverses. This is a descending triangle that it breaks out and immediately traps everybody at the low of the day and then reverses. And you can kind of see where they're not letting these shorts now that traded this breakout out of that trade. If I would project this across, if I traded the breakout of this descending triangle, just notice how they never let those people out. Little things like that to note are very helpful and very useful. All right, and then coming to Friday. Friday. We got the 3 legs down on this day as well. This was the high of the day. This is the highest point. They put in a higher high. Essentially, this is just a wick, but they tapped into previous day's high and went a little bit higher. So this is the high of the day before the New York session begins. They've came off the high of the day, leg 1 down, leg 2 down in London, gone sideways, leg 3 down, again, right into the New York session, looking almost exactly like Thursday, except just a little bit different on how they reacted once they got down here. This is the left side of a W. There's the middle, there's the right side, and then there is the engulfment of the previous bars. Now, they did not get outside of the W until this point here. And very similar to Thursday's example where they've came up, they've made this higher high, and then they've pumped it back down into the low 3 times, and then continued with the trend going higher. So a little bit difficult to trade this. It didn't go vertical. Usually when you get into a really good short squeeze, this is a good like get in, get out. But if you're in a really good short squeeze that is not going to come back and they're not going to retest, a lot of times the higher high will have already been made prior to the session beginning, and then they'll be dumping down into the low. So if they would have maybe in the gap time made a higher high and then they dumped it back down into the low, 3 legs, down into 930, and then put in the peak formation, with the higher high already being formed, that means that it's basically free to just go and expand the range higher. And that's usually going to be the better trades.